Scan to unlock Sovi and ace your tests.
Currency depreciation in Nation T can happen fast, so let's find the cause using these official steps to get the right answer quickly. Let's go!
Expansionary monetary policy in Nation T increases the money supply, which naturally lowers domestic interest rates. This makes holding the currency less attractive for investors looking for high returns on capital. Lower interest rates decrease the demand for Nation T's currency while increasing the supply of it on the foreign exchange market as investors seek better yields elsewhere. This is a crucial shift. Both effects depreciate the currency. This confirms expansionary policy is the primary driver behind the value drop seen here. Well done! Scan the code to learn with Sovi. Watch signs to avoid rush. Trust given facts and check steps for option D.